we have been taught that the only choices for investment are Wall Street products. So stocks, bonds, mutual funds, whatever. And so we dutifully make that deposit every time we get a paycheck, and then we trust an institutional investor that is investing someone else's money. So do they really care? No, they're getting paid no matter what, right? And their job is to do what Wall Street needs them to do. So invest in bonds when bonds are crashing. That makes a whole lot of sense. And in fact, it is the general public through those institutional investors that have picked up a lot of the bond slack. And I personally would not want to be in a bond in this environment. So the way that it impacts the market, since we've been taught that that's the only place to go, is you see the stock market go in melt up mode, which we've been in, right? And I don't really think that's over, but that's because they don't know what else to do. Okay. So even if you listen to the talking heads, what do they say? Well, let's rotate into this. But here's the problem. You can only convert that wealth into, in this country, dollars. So if the dollar has no value and nobody will accept it, then what do you have? A trillion times zero is zero.
Sure.
And that's the piece that people miss. All that is something to say, oh, look, this is the strong dollar. But baked into the very currency system is inflation. Because they knew, number one, governments could tax you without having to go through legislation. I mean, if you know that you're going to get higher taxes, you might complain, right? They don't want you to complain. They want you to comply. And for corporations, they want to be able to pay people less and less to work, other than those that are chosen few. And so nominal inflation causes that nominal confusion. So 1970, the average wage was about $9,500. But a family of four could live with one wage earner.
Right.
Now, I'm not saying they were super wealthy, but they could get by.
Yeah.
Today, I think the average wage is somewhere around, I don't know, 54, 58 grand.
Sure.
And on the outside, you'd go, well, I'd much rather have 58,000 than 9,500, except that it takes two wage earners and you're paycheck to paycheck at 100 grand.
Right.
And everybody that made up to 150,000 got stimulus checks. What does that tell you? What do you think, they want to be nice?
Right.
You know, it's because the currency is worth that much less.
Mm-hmm.
And that's also what's enabled that income and wealth inequality is the system. Well, there are a couple of ways. Number one, what this forward guidance is about is to let those that are in the know and that have been deemed too big to fail. You and I are not too big to fail, but there are certainly entities and people that have been deemed too big to fail. So they're really giving them a heads up so that they can reposition their portfolio. I mean, think about it. We're in January. How long have they been postulating about raising interest rates? And they're not going to do it until March. Right. So they're way behind the eight ball as far as inflation is concerned. So yes, just like you, I pay attention to those headlines constantly, because what also happens with them is they do reveal the patterns. For the normal person that, I mean, they when you read the papers written by the bankers, by the IMF, by the BIS, by the Fed, by all these guys, right? You'll see that they actually admit to making things really complicated, because if they do that, then people don't question them, right? Oh, well, I don't understand finances, so, gosh, they must be so much smarter than me. But when I read them, number one, I know that what they're doing is they're giving a signal to those that have been deemed too big to fail to shift how they're positioned. But it is always the little guy, the institutional investors that are investing your money. that have been picking up the slack so that you don't notice in the bond market how broken it is and how fragile it is, so that when it does implode, well, hey, those big guys have already gotten out. They're already putting their money in hard assets, gold, rare antiques, real estate, etc. And then the little guy is left holding the bag. But as far as patterning is concerned, it absolutely tells you where we are in the cycle when you look at them on a day-to-day basis. Because one of the things that happens, if you know what happens 100% of the time before a crash, before these kinds of cycles or at these end of these cycles, then those headlines actually do reinforce where we are or indicate where we are. So, for example, all those headlines of how much the insiders were selling in 2020 as the markets were going up, melting up.
Yeah.
Do you think they might have known something that you didn't know?
Sure.
Right? But that is one of the things that happens 100% of the time before any major correction, crash, whatever. So that tells you, I do really feel strongly that you should always do what the smartest guys on any given topic are doing for themselves. So again, that's pattern recognition, right? And if you just go and do what they're doing for themselves, so they're selling their stocks and they're buying hard assets. Well, I can tell you where I am looking, and I'm doing what the wealthy do. So gold and silver are the monetary metals. Primary is gold, secondary is silver. Those are the only two assets that I see out there that are severely undervalued. And my personal preference is always to have the lion's share of my wealth in an undervalued asset that is in a long-term positive trend, and the least amount of my wealth in an overvalued asset or instrument that's in a long-term negative trend. So I'm very patient. To tell you the truth, I'm very patient. I identify where we are, and then I like to sleep at night. I am not a short-term trader, so I'm not looking for anything short-term. I'm looking to make sure that I can take care of, actually, if I'm going to be perfectly honest, more about my children and my grandchildren than about me, because I'm 67. So, I'll probably be around another 33 years or so, because I think I'm going to make it to be 100. But, I just accumulate what the wealthy accumulate, and definitely mostly gold and silver.